Today's video, I'm going to be going over the things you need to be doing to reach your full potential. So there might be some things that you're not aware that you're doing, which is holding you back, which is, stopping you from progressing as far as you could. So if you get value from this video, please like, comment and subscribe. Also, we've got a free Discord group down below that I urge everyone to join. We've got quite a few members in there now. It's just good to, when we're trading, any questions, we can just talk with each other. And yeah, it's free, so it's good to just have a like-minded people. Trading can be lonely, so when you're trading and you've got people like messaging and talking, it just helps. It's just good. Also got my Instagram down below if you want to follow me on there. And like, comment and subscribe. If you comment, I'll get back to you. And yeah, let's just get into the video. So firstly, this is assuming that you have a clear strategy. Obviously, that's number one. You need to have a strategy. You need to know what you're looking for. But this could be what's preventing you from reaching your full potential, because I know when I was told to journal my positions, I thought, well, yeah, I'll journal my trades, but in my head I knew what I was looking for, so why do I need to? And occasionally I'd get a bit lazy and think, oh, I don't need to. But before every single trade, you need to make sure you screenshot before and after, because that way you might not see the result, you might not see the mistakes you're making instantly. So when you have a log of trades, 50 trades with before and afters, then when you do a review, you can look back and think, okay, these are the ones that kept losing. What are the similar things which these losing trades have that I can change? So you might not see the negatives like all the time. You might not see the negatives happen in the short term, but when you look back at a big log of trades before and after, you can start to see mistakes. Maybe you're getting in too early. Maybe you're rushing things. So it's important that you journal your positions. Like I said, after the trade, screenshot the outcome side by side, a bit like this. So this is before we broke down, retested these levels, bearish momentum came in, and I'm looking for the shorts to the downside. I have my stop in a certain place, and I have the target in a certain place. And then this one obviously played out. So I can log this, and then any losers that I have, any winners that I have, again, I can look side by side and think, okay, what did I do well on this trade? What happened? Anything I would change? Should I have waited a bit? Should I have waited to get in, or should I have got in sooner? So it's so important to journal your trades, and a lot of you might not be doing that. You might just be executing trades on your brokerage and not logging things. And that way, you need to log every single trade. So every trade that you place, log. Because if you don't and you think, oh, I'll do it later, and then you don't do it, you can't learn from your mistakes. You forget why you entered. You forget the things you're doing wrong in the moment. And also, journal your emotions. So before you enter this trade, write underneath, how am I feeling? Am I feeling anxious today? Am I feeling optimistic? And then midway through, when maybe price gets to here or here, and it starts pulling back a little bit, write down how you feel. Or I feel like I should take profit. I was up £100, now it's pulled back. I'm only up 60. I felt like taking profit, but I didn't. And manage your trade and write how you're going to manage your positions. And that's the importance of journaling, because you can look for mistakes, you can look for things you're doing right, things you're doing wrong, and that's how you improve. You have to look for, your strategy is going to evolve, and you're going to see reoccurring mistakes, and you only can notice this by journaling. Next, reviewing your performance. So once you've journaled your positions and you're understanding your strategy, understanding why you're entering, you've got before and afters, you need to think, right, did I execute my plan perfectly? So forget about the outcome for a minute. Forget about whether it was a win or a loss, because this is what people make mistakes doing. They think that a winning trade's good and a losing trade's bad. You couldn't be more wrong. A winning trade is a good trade is a trade that you took your plan perfectly, that you executed your plan perfectly, not the outcome. So you could have 3 losses in a row, and if you executed your plan that you know has an edge perfectly, then that's a good trade. So you need to understand the difference between a good trade and a losing a good trade and a winning trade and a losing trade. It's not always about winning and making money that day, because it's the long term. If you execute this plan as you know you should, over a large sample size, you're going to be up on your money if you've got the data in your favor. So it's not about the individual outcome or the singular outcome of a trade. It's about, did you execute that plan as you know you should, and despite the outcome, did you execute your trade? So that's where did you execute your plan perfectly comes in. So yeah, despite the outcome, did you execute your plan to a T? Did you miss any positions? So did you miss any positions that, and what were the reasons for that? So did you miss any positions just because you weren't at the charts? Maybe you were working, maybe you were out, maybe you were doing things and you weren't at the charts. Or did you miss any positions because you were fearful? Maybe you had a few losses, you're on a 3 losing streak, and you talked yourself out of that position because you didn't want to keep losing more money. So you said to yourself, well, that doesn't look good, that doesn't look good. Or I would get in, but because of this. And you're justifying not getting in by saying, well, this doesn't look good, this doesn't look high probability. But actually, you're just coping with the fact that you've had 3 losses in a row and you don't want to lose any more money. So review the week and look at, did you miss any positions because of your psychology or because you weren't at the charts? And rectify how much, and look at how much you potentially have missed out on, because they can be the positions which turn your month from a green month to a red month. Was the winning trade part of your plan? This should be. Was it part of your plan? So like I said before, if you won, you can't get happy that you made money. That you have to accept that if I won and was up and made money, was it part of my plan? Did I manage the position exactly as my plan states? Did I execute my entry rules based on what my plan says? Because if you win and you look back and review and it wasn't part of your trading plan, then that's a bad trade. So that you shouldn't be happy about that, because that's a bad habit, because if you keep doing that, you're going to be down on your money, because that's not sustainable long term. What's sustainable long term is you executing your plan as you know you should, as the data supports your plan. So you have to make sure that, was the winning trade that you took that month or that week or that day part of your trading plan? If it was, no problems, it's a perfect trade. If it wasn't, forget about how much money you made. You need to change that. You need to think, okay, well, that was a bad trade, even if you made money. Again, was the losing trade part of your plan? Like I mentioned before, if you lost, that's not necessarily bad. It's only bad if it wasn't part of your trading plan. If you lost money that day, but it was exactly a perfect trade, it just sequence of probability, you can't win them all. If you have a 60% win rate, you're still susceptible to 2, 3, 4 losses in a row. If you lost, that's absolutely fine. So you have to review this. And was there any profit left on the table? Did you manage your trading correctly? Did you get out too early? Did you hold on too soon? Did you, with your rules for your management, did you execute them as you should? So that's what you need to be doing once you've executed your trades: journaling and then reviewing. And lastly, for reaching your potential, I mentioned the 2 slides before about actual trading things, solely focus on trading, and that's what I initially thought it was all about. And that is massively important, journaling and reviewing. But also outside of trading now, this is equally as important. You need to feel good, you need to have good habits that put you in peak performance. So when London opens, New York opens, and you're trading these sessions, you're in flow state and you're performing optimally. So what I changed some of my bad habits. So you can see here I'm drinking. It was, I still have drinks occasionally, but nowhere near as frequently. I started hitting the gym, and these are the habits that built discipline outside of trading, so that I could then be disciplined inside of trading and stick to my trading plan perfectly. I just said you need to execute your plan perfectly. You need to take the trades that are part of your plan. If you're not disciplined and you get in trades too soon because you have a fear of missing out, or you're holding on to trades too long, you're not disciplined. You know what you should be doing. And the way I got more disciplined was doing things like going to the gym, long-term gratification, stopping the quick highs. So like I said, stop the things that are slowing you down, drinking, fast food. That was just for me. I can only talk from my experience. And those are the things where the urges that you get, I want to have that, I want to go out and have drinks, I want to go and get this takeaway. Just by me being disciplined and saying, no, I'm going to stick to the things I know I should be having, which give me the long-term benefit, I then applied to my trading, and that helped me massively. And like I said, the habits outside of your trading affect you inside of the trading. I neglected this massively. I didn't think they mattered. I thought, I don't care, I can still do what I want. I know what I'm doing with trading-wise, so I can enjoy myself, go out, do this, do that. The reality is, trading's a performance-based business. So you have to get into peak performance so that you can perform optimally. If not, you're going to struggle to get these results consistently. You might have a good month and a bad month, but the way I got consistent was sticking to the positive routines, sticking to the good habits, eliminating bad habits as much as I possibly could, reviewing my trades, journaling my trades, and allowing myself to stay at peak performance so I can execute my plan perfectly as I know I should, as I know my plan has X amount strike rate, X amount risk reward, I know what I'm looking for. I have tangible rules, and by looking outside of trading too, like I said, I didn't think this mattered, but it massively does. You have to get ready and be in peak performance outside of trading so that you can apply it into your trading. So yeah, I hope you guys get value from this video. I hope you guys can take some of this advice and get to your peak performance, review your trades so that you know where you're going wrong and rectify that, and hopefully you can start improving and reach your full potential, because the sky's the limit in this business. So yeah, like I said, there's a free Discord down below if you guys want to communicate and talk more. I've got my Instagram if you guys want to check that out, message me directly. And yeah, I hope you guys got value from this video, and yeah, I'll see you guys in the next video.